All right, so in today's video, I'm going to talk about how I've been able to make $26,000 in profit. This is after all commissions, after all fees, in just the past 2 weeks trading. But the best part is only taking 2 trades. I've been averaging about 1 trade per week, and that's been allowing me to have, well, in the past couple of weeks, a 100% win rate. You know, I do think that when you do start to trade this way, you're gonna notice that the less you trade, but you just focus on quality, the more you're gonna be able to win in your win rate, which means you'll be able to risk more and make more money. So we're gonna get into exactly the strategies that you can use to do this and how I've been able to do it. So the first trade on Euro JPY. So this was a short position that I took. I caught 140 pips. And as you see here, we had a nice bearish trend here that started to form. It was a bearish shift of structure, and we start to form lower highs. So this is actually very, very simple of a trade. And the best part is that it's repeatable and you can keep finding movements like this over and over again. So it formed 3 lower highs. This is the first one right here. This right here is the second one. And the third one actually happened, right after I took the entry on this position. It was right here. So where you see my mouse, right there, that was the third lower high. Now, I took the trade when only 2 lower highs were formed because all I need is 2 lower highs to confirm a bearish trend to then take a short position. As you see, we were also holding the EMA as resistance, which was an extra confluence to take that position. So this was Euro JPY on week 1. This was the first week of November. This was the trade that I took. On the second week, I took this trade right here, Euro USD long. So it was a break above 4-hour area of resistance. And you see here how consistently it was going bullish and how consistently it broke above and just pulled back in a very predictable manner. And then from there, we took our long positions and then we continued upwards. I do think this was a trade that I called out. As you see here, Euro USD, very clean trade. So these are trades that, we go through here in our group together. And it's very, very simple. What do you see? Okay, you have that moving average, you have the market moved above and the pullback into it, right? So there's other elements to it, but from an overall picture, you can see why I took that trade and you can also see why it made sense for it to play out how it did. It was a continuation trade, multiple rejections, and we had that moving average bounce. So here were some of the lot sizes used because it's important to, talk about what type of lot sizes, how much risk, how much you were making. Because, if I was risking 26,000 on each one of these trades and then I ended up making 26,000, then it wouldn't be impressive whatsoever, right? But what's important here is the risk management and what would have happened even if the trade didn't go according to plan. Well, if this trade wouldn't have gone according to plan, I would have been down on the first week, $7,400. That was my risk. That's not bad at all, especially considering the amount of profits that we're making when they do play out. We had a risk to reward target of a 1 to 2.44, and I secured $15,200. Now, if you're looking at the math there, the reason why there's a discrepancy is because I'll explain where I exited on this trade. It wasn't at the full take profit. It was slightly above that. But I'll explain that now when we get into the chart. But that's how much profit I actually did secure right before the commission and fees were taken out of it. So 20 lots. How did I get that 20.56? Well, I simply just put it into a calculator. I put the amount of money that I wanted to risk, which was 7.4K, and I simply just got the number. That was the risk in terms of money, and in terms of pips, I risked about 57 pips on this trade right here. As you see, the market did pull back and there was some drawdown on this trade. So it was very important that I actually had that 57 pip stop loss. If I would have had a 20 pip stop loss or a 30 pip stop loss, like a lot of people do with these type of trades, then I would have simply lost the trade. But I understood where my stop loss needed to be to maximize the probability of me winning. Let's move on to Euro USD right here. What lot size did I use on Euro USD? 21.45. I risked $6,900. This was a 32 pip stop loss because on Euro USD, the movements are smaller. So the actual stop loss does not need to be 50 or 60 or 70 pips. On Euro USD, since it's a different pair and the average movement is smaller, a 32 pip stop loss makes a lot of sense. I entered in with a 21.45 lot size, 32 pip risk, 6.9K. Once again, I put that into my calculator and I calculated how much I was going to risk. 1 to 2.4 was my target risk to reward, and I secured $11,711 right before taking out fees. That's less than the 1 to 2. However, I did close out of this trade a bit early once again. So these two examples that I'm choosing here, which were my only past two trades, other than the one that I'm currently in on AUD USD, but that's besides the point. I've basically, these are all of my trades, and they're not this picture perfect example of a trade that literally went like 1 to 4, 1 to 3 risk to reward. It went straight to my take profit. No, these are trades where I didn't even catch the full thing, but yet I'm still catching a 1 to 2 and up risk to reward with a win rate that's comparable to no other trading strategy that you've probably ever seen before. The reason why is because we've really dialed in how many confluences and how many actual reasons and qualifications to enter in on a trade before entering in. And that's why it's been so effective. And I'm going to get into that now. So total trades taken, 2 trades taken in these 2 weeks from November 3rd to November 14th. I've posted every single trade that I've, participated in. I've posted it on my story. So there is no like, I'm just not mentioning the losses. No. I've mentioned all of the trades, and I've mentioned how I was even frustrated that I was only taking 1 trade. I wish I could have taken more than 1 trade a week. But the reality is I only was able to find 1 trade a week for these 2 weeks. 100% win rate, 2 out of 2. Risk to reward, if you average it out, above a 1 to 2. 1 strategy was used. That's the ride the wave strategy. Just this one strategy, this one price action strategy has been used to make all of this profit. And it's what I've been using for the past couple of years. As you can see on my YouTube channel, if you just scroll down, this is all I've been using. You can see how effective it is. You can see countless examples of this working successfully. And then last but not least, this is the profit after commission right here. So it would have been over 27,000, but instead we took home 26,000 profit after commission. Boom, there you go. So these are more or less the stats. And then we're going to get into a bit more about how we took them. So we're going to get into strategy. So I'm going to break down some of the basics of the strategy. I'm not going to break down everything here in this video today, but it's enough for you to get started and to actually start profiting with it. I wouldn't want this to be a video that's like hours and hours long, talking about every little detail, because then you guys would just, not pay attention to the whole thing and just watch parts of it. But instead, I'm going to keep this short, straight to the point, and just give you guys enough for where you could probably take this right now and just start making money this same week if you apply it correctly and if you have the right discipline to not overtrade and not to deviate from this strategy. So let's get into the chart breakdown right now. All right, so I'm here on the markets. So if you take a look on the right side, this is where I have my watch list. I have 3 pairs here right now, but obviously these 2, I just have it for the sake of the video because those are the 2 trades here that I'm mentioning from the past 2 weeks. AUD USD, this is a real trade that I'm in right now. This is not just a watch list pair. This is actually a pair that I'm in. USD CHF and Euro CHF, on the other hand, these are not real pairs that I'm actually in, but I was still interested in them. So that's why I do have it marked up here. I wanted to take buys here, but I just wasn't able to get the buy position. I wanted it to pull back a bit further, but I probably could have found an entry here if I hadn't traded on AUD USD. But because of this, that I'm good, I'm running right now 8K in profit. So this isn't even the point of the video, but it's just something that I'm actually in right now. We'll start with Euro JPY. Let's go back. As you see, I'm on my 2-hour time frame here because this is my main analysis time frame. This is where I like to more or less enter my trades. If I see it on the 1 hour or on the 2 hour, both of those time frames are good to enter. As you see right here, this is the 2 hour. Okay, so what do we have? Well, first of all, we see that this market before October 30th, this was a bullish market. I'm going to go ahead and mark the lows here. So we have this low here, this one. And as you see, we are forming higher lows at this point in time. And at this point in time, we are in a bullish trend. This is very basic, and anyone can see that we are in a bullish trend at this point right now. Okay, so once we reach up here, 178 and almost tapping into 179, which would have been a very strong area where price would most likely reject that, then we started to basically reject. Price didn't like going above here, and as you see, price action followed and showed that. So we had a lower high and then a second lower high right there. This is below 178. So it's essentially using 178 as a mini area of resistance. So first they used it as support, then it broke, used it as resistance. And then, so now I could take off this big zone up here because as you guys can see, the market did have a big reaction up in this area up here, but I can take that off now. You can see the market essentially retested 178, came down, and it started to trade below the moving average again. This is a very key point because the first time it started to trade below the moving average, it did not stay below there. It actually came back above, so at that point we cannot sell it. But then it came down again, and this is when I became very interested in taking sells, and I do think I may have jumped the gun a bit, and I actually entered in a bit early, right? So I entered in on this 1 hour candle because I saw that this 1 hour candle was going to close as an engulfing candle. Hopefully you guys can see what candle I'm referring to. This one right here that I just circled in yellow, that is an engulfing candle. And when I was watching that live, you know, I did have a bit of like, oh, if I don't enter in here, I may miss the entire move. So I did enter in there. Then we had a pullback, tapped into the moving average, which is literally what I talk about all of the time on this 1 hour time frame. If I switch over to the 2 hour time frame, we also got pretty much right at the moving average. We rejected it, and then we had a straight move down, straight down. And ultimately what ended up happening was we got so close to my ultimate take profit down here at 176 that I decided to close out early, and I moved my stop loss down in profit. I was watching this live. This was during the New York session. We were so close to take profit, but I wanted to actually let it hit. So what I did was like, okay, you know what? If it goes above 300, then I don't want to stay in this trade anymore. So I got out here around 295. So it was actually a really good exit plan, and I still caught over a 1 to 2 risk to reward ratio. Caught this entire move. One of the reasons why I targeted 176 was because in the past, it had been used as an area of support, but the main reason is because it is a psychological area of support, and prices love to react off of those areas. So, and as you see, it actually did. So after I exited, it came down one more time, tapped into it, rejected, and then moved upwards. So this is Euro JPY. Now I'm going to move on to Euro USD and explaining why I took this. So I already have marked up here what shows that this was a bearish market structure that then shifted to the upside. Look how consistent this is right here and how the market can show you when it's shifting direction. What you guys have to understand is that if you can master this setup, you'll never worry about having to make money again, because this happens over and over and over again. And I'm not joking when I say that. This will happen over and over, but you need to know how to spot it so you can never miss it, right? Like you'll always see it when it happens, and you can always catch this movement to the upside or to the downside if it's shifting down. It's so predictable. And once you've mastered this, I've seen this for years and years now. I've been trading since 2020. These exact markets I've been trading since 2020. So, I mean, of course, I understand them inside and out. And I know when these patterns happen, and I know what to look for to qualify if it should be traded or if it should not be traded. But there was a good example of another trade that someone in my community caught where he followed the same exact structure here. So as you see, we had that high, lower low, price breaks below the area of support, retests it, And then you can just enter in sales there, which by the way, this setup looks even better on the 2-hour time frame. In this case, he was just using the 1 hour, 4 hour, and daily. But if you switch on the 2-hour time frame, that moving average would have been perfect right there. And that's exactly why he took it. And as you see, it did play out beautifully. And these are high risk to reward trades that happen frequently. So yeah, if you guys understood everything that I talked about in this video, then go ahead and implement it and just see for yourself how this works, because it works over and over. And I think if you go back to my older videos, you're going to start to see patterns in, what type of setups I'm taking and how they all look the same. Like they all look the same in their own way and they keep repeating themselves. Now, as for the actual details of Euro USD, because I think I didn't mention that, my actual entry was a bit higher than this. It was around here, or, it was somewhere around there. And basically, what did I see for my entry? Well, rejections, right? I saw multiple rejections at this support and at this moving average. So I decided to enter in, and honestly, I had already decided that I wanted to be in this trade before it even pulled back. Right here, once this candle was starting to close, I was like, you know what? Euro USD is going to continue up. I had already done all of my analysis previous to the left. And I was like, yeah, this is definitely shifting. It's definitely shifting to the upside. And I want to be in it the second that it pulls back. I saw it at the moving average. And, I wasn't going to wait for the perfect confirmation to enter. I was just going to wait until I saw some type of rejection. And that's what I got. And then that's what I entered in. And, it ended up working out beautifully. So on Euro USD, one of the things that I did was I actually did put the Fibonacci, right? I put the Fibonacci, and there's a couple of ways to do this correctly, and there's only specific times when you want to use it. You don't just want to use this whenever, but anyways, this is something else that I use to pinpoint my entry even better. And as you see, some of my other students were watching the same thing. I do believe another one of my students caught this exact same move. Well, I know for sure he did. It was Mike, and he's funded already. So yeah, it just goes to show the accuracy rate of something like this when you really have it perfected and you really have it mastered down. So from now on, I'm going to be looking to increase my lot sizes, increase my capital, and just overall just try to get more funding behind me so I can do these trades on a larger scale, because they are really starting to become so consistent and so effective. So with that being said, if you guys enjoyed this video, leave a comment down below with what you want to see next. Yeah, go ahead and apply this and see how it works for you. So I will be seeing you in the next video.